Hey, good morning, everybody. Welcome to Thursday, December 5th. I'm glad you're able to join us today as we had really a great day yesterday on Wall Street. We'll have to see what today has to hold for us. A lot of stuff happening out there, and not on the earnings side today, but more on the kind of the economic front. We've got some stuff happening there we'll talk about here in a few minutes. I again want to thank you for tuning in to our rebroadcast of for lack of a better term, the Phil and Dave show, as we talk about the economics and the finances of the United States and the world right now. So, thanks for joining us. I hope you get something out of today's show. If you like what we're doing, please like our post on Facebook and share it with your family and friends. Dave will be with us here in just a few moments.
And Camila Cabello there. It is called Senorita. We're at 8:40 now. Not that one. There. 20 before 9. Time to check in on your money and see what's happening on Wall Street this morning. Up day yesterday. It's probably not much of a surprise because the day before was a down day. You know, we've kind of got a rhythm going here. Let's see what's going on in detail. Head down to the offices of Statler Financial Services in downtown Sebring. Phillip Statler standing by. Phillip, good morning. How are you?
Good morning, Dave. Hey, doing well today. And you didn't cut us off at the last minute to get back on the air, so that was a good thing too.
Now, we actually had a chance to look at the record, and I had a short one on and was watching the time this time. Big day yesterday on Wall Street. We didn't get back all that we lost in the prior 2 days, but up 147 on the Dow, 46 on the NASDAQ, and darn near 20 on the Standard & Poor's. We're heading in the right direction, and then China decides to kick in and help a little bit by saying nice things about trade overnight.
Yeah, they did, because when I got up this morning, I think the futures were actually trading down just a little bit. And definitely made a comeback later this morning to pretty much all positive ink right now.
Yeah, I wasn't feeling real good when I went to bed last night because the futures were down, not by a lot, but they were off by a bit. It looked like we were going to have that one-day rally, and that was about it. And then China says, we're in close contact with United States trade representatives and working on the settlement. And that just felt good. The whole world's bright and sunshiny again, and we're trading up. The other thing that we started out this morning with is the usual Thursday macro stuff the government gives us. First-time jobless claims after a real disappointing private sector report yesterday. Only 203,000 first-time claims this morning has to give us some confidence.
Well, it does. That's better than expected. You know, the expectation was 215,000. So definitely, especially after we saw yesterday jobs number on the private sector be so disappointing, that's kind of it's nice that we ended up surprising on that side.
Absolutely. The other item out of the federal government that starts the morning out is the trade deficit. They estimated as being $47.2 billion last month. That's off considerably, but not quite as far off as the market expected. And you and I were both kind of saying, well, I wonder if the market's going to consider that good news or bad news, because it may mean that we're not importing as much stuff from China, which has implications for retail.
Yeah, it does. But, you know, honestly, we look at the futures and it doesn't seem to be moving the needle in any at all.
It's the decline in the trade deficit probably is the factoid, and that's about the only thing that they're responding to, since we've got a pile of eyes watching retail and what's going on with that. And I know you got a pile of those. Before we get into the retail stocks, one non-retail stock reported overnight that you mentioned to me before we went on. H&R Block, full-service tax prep. Tax forms are so easy to do ourselves. What are they saying is going to happen to them this year?
Well, you know, their main business is going to be the first of the year, which is really their fourth quarter fiscally that they report. So this is their third quarter, and they lost 93 cents a share, which was a penny wider than expected. Their revenue was slightly below what was forecasted. You know, again, they make most of their money coming up here in the first part of the year. So it's not really hurting them. They're actually, yesterday they closed down 0.9%. So this morning they're up 1.1%, basically.
I'd call that pretty close to flat net across 2 days, wouldn't you?
Yeah, pretty close. Pretty
Did
close.
they have did the report you saw happen to mention guidance? Because, like I mentioned, I look at the full price and full service tax prep firms, and look at the simplification on the tax. But what I don't know what the percentage is, but a whole pile of us didn't see itemization as worthwhile last year. I kind of wonder whether or not the tax prep industry has got a little bit of a challenge ahead of it this year.
Well, there's always a challenge, but here's what happens. If supply starts to diminish, then usually the price goes down. Well, in this area, it actually is the opposite, right? So there's fewer people doing it, having to do it. So the price actually is good. They're able to raise their price because the people that do need it are having to pay for it. The other thing you have to look at in the tax business is, especially in those storefront type places, H&R Block and the likes of them, they still make a lot of their money in February. They don't necessarily do the refund anticipation loans anymore, but they'll do cash advances on the refunds. And so those people that are strapped on cash, they go in there full force because they want an advance on their refund.
Ah, there's where the money gets. Okay, it's kind of like some of the internet businesses. I look at them and I say, how do you make money off of this business? I hadn't even considered about the refund anticipation loans. That's going out of vogue. But yeah, the cash advance strategy. There's some money to be made on that big time, isn't there?
There is, and let's face it, they charge a huge amount of money for that. Um, and that's especially when you think about it, Dave. People today, if they file their tax return, usually, unless something goes wrong, within 5 to 10 days, they have their refund in their checking account. So
Under
they're paying a lot of money for a 10 day advance, basically.
I got you there. Talking about the sector we really care most about during this month of the year, retail, kind of got surprised. We got a whole bunch of retail quarterly reports out, didn't we?
We really did, and I thought that we were pretty much done with all the earnings. Actually, to be honest with you, Dave, I thought we were pretty much done. We're just going to look at the macro stuff. So, but not being the case, we got a pile of them. Starting off with Dollar General. Dollar Generals are popping up everywhere these days. They beat by 4 cents a share. Revenue was also ahead of estimates. And here's where they really shine. Same store sales were up 1.3% more than expected. They were up 4.6%. So a really good number there. And then, of course,
I knew all the baby clothes my wife was buying for our great granddaughter was going to float that company upward a little bit over the last few months.
yeah, but here's the trifecta, right? They raised their full year guidance, and one more thing, they added $1 billion to their share repurchase program. So a lot of good things there. Yeah, they're up to a little over 2.6% this morning.
That's amazing. They kind of do everything all at once, beat the street and then buy back a bunch of stock at the same time. That's a ticket to a big gain.
Yeah, it really done well there. Then we had Express Retailer. Again, they're mostly in the malls. That's where you see them. They lost 3 cents a share, which was better than expected. They were expected to lose 9 cents a share. Revenue was above what was estimated. Their same store sales declined by 5%, but that was better than expected. They expected them to go down like 6.3%. So all in all, the report is good. I mean, they're still losing money, don't get me wrong, but their stock's up 15% this morning.
Wow. All you got to do is lose less than they expected. Talking about losing money, you got a couple of jewelry stores. One of the ones that was losing money that didn't lose as much as they expected was Signet Jewelers. That's one. I don't think we've got one of them in town, but big national jewelry chain. They've made a lot of noise over the years, but they've fallen on hard times in terms of money, haven't they?
Well, they didn't have a good quarter, but Dave, let me just enlighten you a little bit here. Signet Jewelers is the holding company for Kay Jewelers, Jarrett Jewelers.
Oh,
All of those guys are part of the Signet Jeweler group of
okay.
jewelers.
I remember Signet is a brand name in other part of the countries. Had forgotten that they own a couple of the big ones we got around here.
Yeah, they really do. But you're right. They had a not so good quarter, but better than analysts expected. They lost 76 cents a share. they were expected to lose a little over $1 a share. So I guess that's good news, definitely. Again, kind of like Express, they beat on earnings also. I mean, on revenue, and same store sales were up 2.1% when they were expected to actually drop 1.3%. So what's that? A 3.4% swing there in what was expected, and so good things happening there. They're trading up 7.8% this morning.
That's good news. How about the high end of the jewelry business? I noticed you said that you had Tiffany's this morning too.
We did have Tiffany's, and Tiffany's, the stock price could probably be a little jaded because they're being bought out, but they earned 65 cents a share the last quarter. Now the problem is that they made money, but it's 20 cents a share less than what they expected. And
Oops.
revenue also missed the forecast. Their same store sales were flat, which that's not good either because they were expected to be up 1.4%. So they were hit, it said, by some of the unrest over in Hong Kong. So that's put a little bit of an if in theirs, and they're basically not being affected much today. They're flat right now.
I'd forgotten a lot of high end stuff tends to go in through Hong Kong as a port of entry, doesn't it?
Yeah, I think so. It does. And then so let's go to a big loser today in terms of stock price anyway. Michaels. Yeah, I don't know about your wife, but my wife loves to go to Michaels.
Oh yeah.
They can always find something there. But they missed by 9 cents a share what was expected. Revenue also missed, and same store sales were down 2.2% compared to supposedly they expected them to be up 0.3%. So again, a 2.5% miss there. Their current quarter forecast is below what the analysts had expected. So you know what that means. A miss on three fronts. You're going to be down today, and they're down 12.25% this morning.
Youch! You almost have to be like Jay Jill losing their CEO to lose more than that, don't you?
Yeah, that was definitely not a good thing there either. So,
time for one more retailer if you got it.
All right, so let's go to below 5. We don't have one here, or I'm sorry, 5 below, not below 5. 5 below. We don't have one here, but we have a new one now up there at Poisoner Point, that 27 and I-4, and they reported 18 cents a share. That was a penny better than was expected. Revenue was above forecast, and the current quarter sales outlook was below what analysts have expected for the current quarter. Doesn't seem to be affecting their stock today, though. They're up 6.75% this morning.
All righty. Resetting the table this morning. Green ink on Wall Street yesterday. OPEC's meeting, so I've got to assume that's going to mess with our oil prices. How about the equity futures, Phillip? Where are we heading 45 minutes early?
Hey, it looks like everything's coming up roses. We're green across the board. We got the Dow up about 1/3%. We got the S&P 500 up 0.3, and we got the NASDAQ up 0.4 right now. If we look at the commodities indexes, we've got gold basically flat. Silver's up less than 0.1%. And you're right, crude oil's up, not by a lot this morning. It's up 0.25% to $58.58 a barrel, but I'm seeing it on the street in the gas price, Dave.
Oh, yeah, we certainly are. And like I said, OPEC is starting their quarterly meeting today, which probably means people expect more price fixing. So 58.79 might be about all we're going to be expecting for a couple of weeks as far as oil prices are concerned. Overseas markets, green ink when Asia closed this morning off of those nice Chinese noises from the trade negotiations. Europe generally trading off halfway through their day today. Phillip, stabilization and a fruitful retirement kind of go hand in hand when you're talking money. How do I get a hold of you to make sure both happen?
Dave, hey, to get somebody with an independent outlook to help coach you into and through retirement, give us a call at 863-382-0037 and let us schedule the first part of our process, and that's our financial x-ray, where we dig down to make sure how much risk that you have in your current portfolio to make sure it matches up with your risk number. Catch our website at statlerfinancial.com, and then join us every weekend for the Statler Financial radio show 6 a.m. and noon on Saturdays, 10 a.m. on Sunday mornings on your sister station, News Talk 730 a.m.
And back here again tomorrow morning to see what they say on the trade to drive the markets, right?
That's right, man. You have a
It's
great day, and I will talk to you tomorrow, man.
Thank you so much, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Of all the
Hey, guys, again, I want to thank you for joining us today. A lot more reports than what I thought were going to be out there today to talk about. I hope you got a little tidbit out of there. If you like what we're doing, again, please like our page on Facebook, share this with your friends and family, that we can get out there and really start to promote what we're talking about every morning, because it is important that folks stay connected with what's happening in the economy as we move forward. So, hey, if you need to talk to me, give me a call at 382-0037, and let's schedule a time just to chat. Have a great day. I look forward to speaking to you again tomorrow.